Today's positive trading was expected based upon the patterns formation that was setting up as of Friday. Notice all the elements that we could see what was occurring in the Dow Jones Industrial Average. It failed at the 50 on the first leg up. It pulled back right back to the T-line. An inverted hammer harami with a positive open on Friday. Just the mere fact that an inverted hammer followed by a positive open usually creates a probability of 95% or greater that it's going to trade higher, completed the bobble pattern. The bobble pattern being merely a JHOOK pattern where you can see exactly where the selling occurred and exactly where the buying occurred and what would happen once it breaks out through the resistance level a second time. That if you took the 50-day moving average out of this chart, essentially you have a JHOOK pattern that tells us wave 1 and wave 3 are probably going to be the same magnitude, making this gap up here your next likely target. Knowing what usually happens with investor sentiment allows investors to take advantage immediately of when the bullish trend is in progress without having to be hesitant and wait for further confirmation. They know they can be buying immediately on a positive confirmation. The Nasdaq had the same type of setup where it was above the T-line, pulled back, and then did a JHOOK pattern. So when you have the Dow and the S&P 500 doing a bobble breakout and the Nasdaq doing a JHOOK pattern, that's pretty good evidence that there is consistent buying across the board, that investor sentiment is very bullish. If you take that same analysis into your analyzing price movements of individual stocks, our recommendation on WATT was based upon a fry pan bottom, kind of a wedge breakout, and today we started buying. Even though it did a doji day, it still sets up for a very high probability trade setup. If this opens positive tomorrow, the probabilities, because of the simple doji rule, is that it's going to trade positive. And if it trades positive, it's got the likelihood of doing the same magnitude move as this day right here, creating what we call a doji sandwich, which would also illustrate that this pattern is breaking out to the upside. This is not magic. This is merely the reoccurrence of how investor sentiment works time after time based upon pattern setups. That same knowledge of what happens in a pattern, such as a JHOOK pattern, we know that wave 1 and wave 3 will be the same. That if that pattern is just starting and ends up the day right here at an obvious resistance level that can be drawn, that if it opens positive, that tells us two confirming indications. One, the resistance level is not acting as resistance anymore. And two, it's confirming that wave 1 and wave 3 is now in progress. Once again, knowing exactly what should happen tomorrow, if it opens positive, you can be a buyer aggressively, knowing that this wave is broken out. That same scenario can be applied to Apple. Look where your JHOOK patterns occurred, right? Smack dab off the 50. Wave 1, if wave 3 is the same magnitude as wave 1, that tells us there's a high likelihood there will break out through this level. Now, you get added strength when we can identify what pattern is occurring and knowing what should happen at a resistance level. Everybody else may be watching to see what's happened at this resistance level, where the candlestick investor has much more analytical ability to see what's happening, knowing that there's going to be more strength coming into this price movement if it breaks out through that resistance level. That'll be it. We'll see you in the chat rooms.